I think it's important that we go over what may happen for the next 6 months in cryptocurrency. It's your boy Crypto Millie back with a detailed 6 month report. Just some research that I've done. I think I shared a little bit of the research in the Patreon. So if you are into exclusive content, be sure to check that out. Also, let me know in the comments if you truly believe that this rally is sustainable. This is a very weird market, and we're going to get all into it, take a deep dive in what possibly could be happening. And I just need everybody to engage with the video and let me know your current sentiment on the market. If you do have interest into tokens like virtual up 24%, even Tau or Jasmy, you can use my crypto.com link to open an account and earn 25 to 50 bucks on your first purchase on crypto.com. So use that link. All right, let's get into it. Market is opening up well, but we've been getting bad news from a macro standpoint, which is crazy, right? Bitcoin just hit 97,000. Yeah, it's at 97,000, right? And we're starting to see this confirmation candle become even more clear as the week goes on, right? Today is Thirsty Thursday, and you can see here, let me actually make sure I'm right. Thirsty Thursday. Yep, Thirsty Thursday. And you can see here this candle is getting even more longer as we go on into the week. So it's a good chance that this could, within the next couple of weeks, Bitcoin could retest the all-time highs, right? All-time high was at like 108. We could cross somewhere between 100,000 and 103 within the next 2 to 4 weeks. We did get that buy signal on BTC. And all of this is happening in the midst of us getting a negative print. So we did get a negative print with the GDP yesterday, right? When we get two in a row, by definition, that's a recession. Let me know how it's going wherever you're at, right? But today we got jobless claims, which rose, right? Rose 18,000 from the forecast, which was around 2,223,000. So this is the highest since August 2023, indicating a potential softening in the laboring market. Continuous claims also rose, so more people are not finding new jobs, right? They're on unemployment and they're staying on unemployment. And when you think about this job report and what we've just seen from the economy slowdown as far as GDP, it's really hard to wrap in my mind how we are starting to rally, right? And if this rally could be sustainable. We're going to talk about that, right? The key takeaway here is that a significant increase suggesting more individuals are remaining unemployed or seeking benefits longer. We got to go. This is going to be a pretty long video because we got to talk about where crypto could be in the next 6 months. The ADP private sector jobs weakest since July 2024, significantly below expectations, signaling a private sector hiring slowdown, right? And I know a lot of people that I've talked to in the real world have been talking about how, hiring has been slowing down, even though you see a lot of jobs posted. We are hiring. They are not necessarily bringing in those new people. So the labor marketing is softening here, and the implication is a weakening labor market typically signals lower economic growth, which is bearish for risk on assets. Equities and cryptocurrencies often decline when recession fears rise as investors shift to safe haven, which people already know this. So they're trying to figure out, like, how are we getting this? There's bearish news, there's negative news, but things continue to go up, right? The price in cryptocurrency continues to go up. So based on what I've been, what I've seen from doing the research, right? The market is pretty much reacting to the job data, expecting a dovish Fed, right? So they're expecting Fed to be dovish with the continuation of a weaker USD, which we're seeing from the DXY, which could support crypto prices and specifically a Fed cut, right? So a cooling job market and recession fears could trigger choppy crypto trading, but also, right, support evaluations if the policy risk subsides. So this right here, the Fed seeing that weakness in the market could, pretty much entice them to cut, right? And if we just go up here, we got literally a 4% chance of a Fed cut, right? So what the experts are saying, as far as the macro experts, I'm not a macro expert, but I'm just doing the research for you guys. You don't guys got to go do it. What they're saying is that the market right now is pricing in the June Fed cut. It's pricing in. It's like, okay, we got bad job data, we got bad economic data. The Fed is going to cut in June. So the market is kind of front running that Fed cut, right? So we you know we got the green print here on the total three. We're looking at a confirmation candle above the trend line on the others, and you're starting to see some activity, not just in the top 100 coins, but also in the trenches, right? You're seeing like these little altcoins, micro caps. I think like a token Gork or something went up to like 40 million in one day, right? In the midst of everything we just talked about here about the economic slowdown, right? So I will continue to approach this market in caution, right? I think that when you look at the outlook, right? Short term, we're mildly bullish for risk on assets due to the rate cut expectations. But medium term, in my opinion, we're bearish as labor markets soften and tariff concerns point to economic weakness. Investors, not financial advice, should exercise caution amid increasing recession signals. So the uncertainty is still there when you think about the initial jobless claims, the fact that the housing market has declined, continuing unemployment claims, and the GDP growth in the negative, right? Declining, right? From the previous quarter, which was 0.5. So where's this liquidity coming from? Where is the liquidity coming from? Where is the liquidity coming from? Because I believe that we still have an issue here, and the issue here is retail and liquidity. So, short term, madly bullish, right? We're seeing the relief because everything was oversold for risk on assets due to heightened expectations of Federal Reserve cuts, which could lower borrowing costs and boost liquidity. The weak labor market data has fueled optimism for a dovish policy, as evidenced by positive equity futures. Medium term, though, we're still kind of bearish, right? The labor marketing softening combined with Q1 GDP contraction and tariff-related uncertainties heightens recession risk and could pressure corporate earnings. Persistent inflation or hawkish Fed response would exacerbate downside risk. And pay attention to like my YouTube views, the YouTube channels, the live streams, right? When those more people come into the live streams, that's a signal that there's more optimism in the market, right? When you start to see me getting those marketing deals, right? You see me getting a few. You haven't seen me get sponsorships in a few, but you've been seeing me get a few marketing deals and sponsorships. That is a sign that the euphoria and the momentum is starting to tick to the upside. So you are seeing that in the short term, but again, we have to be cautious because the economy is telling us that something is wrong, right? That something is wrong, right? So I am saying that this rally, in my opinion, is solely based off things being oversold and market makers pushing the price back at the top of the range. If we can get into price discovery before a Fed cut, that would be amazing. I just don't know how that happens, right? But again, this market does whatever it wants to do, right? Now, based on my AI model, right? I put all of my research that I did within the last week into the AI model, everything from the macro experts, macroeconomics, the statistics, we all put it into the AI model. And this is the crypto altcoin rally timeline that was pushed back to me, right? So based on the interplay of key markets, the current Bitcoin altcoin rally is likely to last 2 to 4 weeks, with the potential for a shorter duration if macro data disappoints on a longer tail, up to 6 weeks if Fed dovishness and institutional buying persists, right? So 1 to 4 weeks, we could see a continuation of this rally. The rally is likely to continue, driven by rate cuts, bets, institutional flows, and FOMO, right? People see price go up. They know that we could get a Fed cut. Institutional whales are buying. Whales are loading up, right? Whales are loading up, right? You see the hash rates printing, the whales are loading up. Altcoins like XRP, Sol, and the AI tokens may see 10%, 20% gains. Meme coins could even spike, but understand that these low caps and these micro caps do face sharper corrections. Now, medium term, 1 to 6 months, right? Beyond 4 weeks, macro headwinds, recession risk, tariffs, inflation, and retail liquidity constraints will likely trigger a correction. We're still going through, we're at like all-time lows of people's savings accounts, right? The people's savings accounts. Expect a 10% to 20% BTC correction and 20 to 40% altcoin pullback, right? Especially if the Fed signals fewer rate cuts on inflation. So if we get this relief rally going in towards the end of May, who's to say people might start selling in May? You got to think that, because that always, like, I don't know what's the whole thing about selling in May, but that's a thing, right? The post-rally landscape, right? So retail liquidity constraints, macro headwinds, and overbought technicals suggest a correction by early June. The correction severity will depend on inflation trends and the Fed cut decisions. Market participants should prepare for increased volatility and potential trend reversal. These are some of the key catalysts to watch. The non-farm payrolls on May 9th. Consumer price CPI, of course, on May 14th. Fed commentary, the FOMC minutes, right? We got a FOMC meeting, and a few crypto specific events in May. I think like something's happening in Vegas or whatever. So just pay attention, guys, to what's going on, and understand that even though we are seeing a little bit of euphoria within the market, you know, like, you know, I guess, you know, my motto here is telling me, like, pay attention to the week of May 9th to May 14th, right? Non-farm payrolls likely to show further employment weakness, reinforcing recession fears. Technical indicators could become overbought by then. Retail liquidity constraints begin to limit buying pressure, right? So that's like the reality check. Reality check, right? Market narrative begins shifting from Fed rescue to stagflation risk, right? So, like, this is all of the information that I've input into my model, and it's literally giving me a chance and percentage and chance that we could go into a recession, right? And again, this is like the bear market timeline, right? This is the bearish case, right? This is the bearish case. Current market rally is built on shaky foundations and likely to reverse within 2 to 4 weeks as macro deterioration, supply chain chaos, and recessionary signals overcome temporary Fed-driven optimism. Substantial evidence points to an impending market correction by June, with multiple catalysts threatening to trigger a significant downturn. So, like I said, I'm putting it out there, guys, for you as far as the bullish case and the bear case. Bullish and the bear case, right? This is, I mean, you ain't gonna get no research like this anywhere else, right? This is bullish and bearish case, right? So this is the bear thesis. The current market rally is likely to reverse into 2 to 4 weeks as fundamental economic weaknesses become impossible to ignore. The combination of manufacturing contraction, PMI 48%, rising unemployment, and Q1 GDP contraction signal an economy under severe strain. While Fed rate cut expectations are temporarily boosting risk assets, the reality of tariff-induced inflation and supply chain chaos will likely force the Fed to be less dovish than market expects. And anecdotal evidence of tariff whiplash and the inability to find alternative suppliers underscore the systematic vulnerabilities in the economy. By early June, expect a significant correction across risk on assets as recession fears intensify. Bitcoin faces a 10%, 20% correction, altcoins 20 to 40%, and equities 10 to 20%, with small caps hit the hardest due to manufacturing exposure. So again, guys, this is just my AI model. This is not me, you know what I'm saying, it's giving you a prediction like I got a freaking crystal ball in my hand. This is a AI review of all of my research and information that I plugged into it. I want to make that clear, okay? So I was just giving you guys the bull case. But we cannot ignore there is a bear case here. Okay? All right. So, I want to make that clear. Right? My AI here even gave a 6-month outlook, right? The U.S. economy is flashing warning signs as manufacturing contracts, unemployment rises, and tariffs disrupt supply chains. The analysis breaks down what's ahead for markets and risk on assets over the next 6 months. Guys, I want to make this video too long. If you want the exclusive content and exclusive breakdown on this module, let me know inside the chat. I've been doing like tons of research, really trying to break down where we're headed inside this market. And it's kind of funny, like when you put all of the things that's happening within the macro environment right now, what AI tells you, what could happen within the next 6 months. So, hey, y'all let me know what y'all think. I'm not bullish. I'm not bearish. I'm just putting stuff out there, right? Based off information and statistics that we do have and we do get. Of course, this is not financial advice. Some of this information may be lagging. You know how these indicators and things work. Always go do your own research. But the relief feels good. I'm not going to say I'm confident in this thing being sustainable, because if I did, I would be telling a bold-faced lie. I'm going to continue to move cautious. I'm not really going too hard. Like, I did a little bit stuff within the Tau subnet ecosystem, but besides that, I haven't been going too hard. The other day when I told y'all about that meme coin that I bought, and then I bought bank meme coin and made like a 3 or 4x. Outside of that, I haven't even been messing with meme coins, right? I've just been chilling, researching the market, preparing my watch list, putting together things within each narrative, but really taking a deep dive into the macroeconomics of things. So, guys, let me know what y'all think about this report. Do you think that we're going to be bearish in the next 6 months? Do you think we're going to be bullish in the next 6 months? I would love to know everybody's opinion. It's your boy Crypto Millie. I'll see you in the next one.